Hello and welcome to Analyst Hangout. I am Perpetual Fasa Repeater. It's a beautiful Friday, and how are you doing the 18th day in November 2022? Well, joining me today are two gentlemen. Ambrose Amodio, the Chief Research Officer, Invest Data Consulting. Thank you for joining us today.
Thanks for having me again, Perpetual.
As always. And also joining virtually, we have Mukhtar Mohammed. Mukhtar Mohammed is the CEO of Finance with Mukhtar. He joins us virtually. Thanks for joining us today, Mukhtar.
Thank you, Perpetual. Always a pleasure. Good afternoon. Or good evening.
Absolutely. Well, very quickly, we'll begin with the activities during the week. That's the stock market activities. Well, the seesaw movement of the Nigerian exchange continued today, Friday, as the key performance NGX all-share index closed positive, just as relative strength returned to blue chip and growth stocks on the exchange. Also, market players continued to digest the corporate earnings and the latest inflation figure to reposition their portfolio and hedge against the rising inflation in some stocks with high dividend yields and strong earnings to support higher payout as financial year-end of many companies draw closer. Well, that's the story now, and I'd like to start with you. Talk to us about the dynamics that we witnessed in the market. You know, I mean, it was an amazing one. 2 positive and 3 negative. Talk to us about that.
Well, it's a good one. If you look at the positive side of the market, I think it's more strength than negative. That means for the week under review, we expect the market to close positive for having a 1.1 today as against 0.4 the previous 2 days, which is for me it's okay. But the good thing is that the almighty inflation data for the month of October has hit the market, and analysts and the investors are busy analyzing this data and see how to combine or marry the two with the third quarter earnings of these companies. And they are seeing that most of the investors that are looking to the free or the low risk instrument are really on a red position. With inflation still ticking up, their red position is still becoming negative and deep. For me, people are looking at, if there's opportunity in the equity market, and also the time space, which is the time value of money, or call it anything, is shorter for you to make position in equity for now, because any position you are taking in the fixed income market, your 1 year return or your 1 month space about either 15 or 16% mass in terms of return. But for equity, a day we know that one day it can get 10% in a day. And also looking at the earnings for this Q3, a review value for companies that has the capacity to pay you a better dividend at the end of the day. Then seeing their earning yields as we speak now, we know that earnings is just comparing what they paid last year with the current price. And looking at the earnings that came for third quarter, I give you an insight if these companies are possible, it's possible for them to pay higher than what they paid the previous year. And also as we speak now, about 8 or 12 companies have even surpassed their full year 2021 performance for third quarter. It's an insight that this company is likely to pay either a higher dividend or pay the same. But because prices are low, these are high. That means for those that understand the market, yes, there is some risk associated with equity investment, which we know. But you can take calculated position, calculated risk, you make hell of money from equity. In terms of dividend yield, you might not get much capital because liquidity in the market is still very low. But there's one thing that does change in the peak under review. We're seeing that volume are coming back to some banking stock and some blue chip company. It tells you that the smart money in the market are already positioning on this figure that are coming. They've seen the third quarter number of this company. They've seen the inflation figure that they released ahead of what the Q3 GDP. I know that next week is MPC meeting, but they're also thinking that how with the MPC or certain bank already going to another design, another way of controlling what fund in circulation. They might have to say let's leave change interest rate unchanged for now.
So that's what you think is
no, I'm coming. I'm not. Let's leave MPR unchanged for now.
Okay.
Let's see the part of, because you can't be combining the two at once. Want to control, control inflation. Don't forget that for me, yes, if you look at the liquidity in the economy, the liquidity is not really in the system. This liquidity is outside, and that's why they are taking this opportunity, this decision to kind of bring those money that are outside the bank cover back to the if this is done, I believe that they should give space to see what they what they did in the last
impact, how successful or otherwise it is before going to MPR rate.
But if they decide to do otherwise, but I'll tell you that there's still opportunity. There are some sectors that are going to give you a better return, even when they do otherwise. Because you don't want to do otherwise, I don't want to do more than 25 or 50. The 150 we saw last was not repeated. I mean, you are taking us almost to 17% in 150. That means if you want to do anything otherwise, we have 50% or 25 mass. That's okay.
All right. Well, Mukhtar Mohammed, let's have your thought. He has said a lot of things. He's saying that because of the Naira redesign, he doesn't think that the MPC would think of, a rate hike at this time. What are your thoughts? What are your expectations for the market going forward? Yeah, go ahead if you can hear me.
Okay. Can you hear me?
Yes, I can.
Okay, I said I agree with everything you have said about the market for this week. I think he's spot on them. I don't expect him to hike any hike yet. The MPC have not done anything extraordinary. They are just one away from the main issue that they should be dealing with. It has to do with how can they fix the FX. They have been running from it for a while now, and they keep running from it. They've not come up with any formula to tackle it. So basic inflation have it in the economy as long as we have not fixed that FX rate. And fixing that FX rate has to come with a lot of issues that are beyond their control. So the one they have in control, I think for now, is the redesigning of the Naira notes, and which they are going ahead to do. And then looking at how that could help bring down the gap between the official rate and the parallel market. It did for some time, but like I always say, it cannot sustain it, and economic variables and demand and supply will come to play, and everything will take its place. So definitely, I think they've not addressed what they ought to address, and so that's why they will continue to have those challenges. But the market itself is not looking too bad this week, and even if we saw a lot of sell-off in shares of Guinness Nigeria PLC, outside of that, I think the market response this week have been slightly better than what was response last week. And what we see investors doing these days is comparative investment, where they move from one stock to another, especially looking at price in terms of capital gain and dividend payout, dividend yield in the coming years. So that's what normally happens between December and January, and I think it will continue, but we don't expect to see so much of a bullish run. But you will say that GTCO has moved from 1776 to about 19. I'm saying with Zenith also moved from 19 to about 20, almost 22. So we'll see activities on those space, and investors just have to keep their eyes on the stock that they think they desire in terms of dividend payout or capital appreciation.
All right. I think you totally agree with him.
Yeah, on the sales page, but in addition to what you just said, before now, we know that most liquidity in the market is very low. And we expect that at the end of MPC meeting by next week, and with this move for the return of Naira, I believe that gradually we'll start seeing liquidity in the market. And also the PFAs or the big boys in the market that are holding cash also see opportunity that, like you just mentioned GTB and some stocks, we saw that banking sector become like the toast of even investors because of their consistency in dividend payout. And I believe that also what will sustain the market next week, because once at the end of the FPC meeting and rate is either adjusted little or unchanged, you see that liquidity that having somewhere, especially those were PFAs, the smart money, will start coming back and come to meet those stocks that are really suffered losses in previous, that has good fundamentals and value. For me, investors in the market should know this is the time position. Don't forget also that the end of the year seasonality is close now, because already more than half of the last quarter of the year we're already in. That means from December, Santa Claus will start coming in, end of the year, end of the quarter, and also that seasonality, I said, that also going to impact on the performance of the company. We have seen their third quarter already. Despite the purchasing power of many Nigerians are low as we speak now, I'll tell you, nobody will push Christmas celebration back. Also, because I don't have money, that means they're going to spend this period. That has a role for impacting companies that are into such related commodities they're going to buy. At the end of the year, you see a better number for the last quarter of the year. In addition to the what we have seen for 9 months, you see those companies are also going to give us a better result. That's why I said investors start taking this opportunity. But anywhere in the world, the last quarter of the year is the most active quarter because of activities and all those stuff. For me, I think the market is responding gradually. Tell you that people in the market understand where to be, and that is good for our market, because
they definitely understand time horizon.
Yes, it's good that we're coming to see knowledge investment in our market. That tells you that These people that really run the market, who the PFAs, they understand the market.
Yeah, I'm actually waiting for the PFAs actually.
No, once they come, they are not in the market. Once they are in the market, you see the volume changing. We are not seeing volume as at yesterday was around 79. I have not seen the volume for today, but the volume is that these people are not in the market. But individual stock, we are seeing volume. That is that I think for the general market, we have not fed them because of what we have not seen the real volume coming from them.
All right, moving now to inflation. We'll be talking about inflation now. Inflation accelerates for the 9th consecutive month to 21.09% in the month of October from 20.77% recorded in September. The Consumer Price Index, which measures the change in prices of goods, increased to 21.09% year-on-year in October, compared to 15.09% in October 2021. Month-on-month, the headline inflation rate for October was 1.24%, which was 0.11% lower than the 1.36% recorded in September. I'd like to start with you. What do you make of this number and, the impact so far?
It's not in news again in the market that we have seen for the past, from the month of May, we have seen kind of galloping, rise in terms of, price, consumer price index. And now, in the last 2 months, we see that there's a slowdown in the expansion, which is good. Tells you that, all this move was seen, something happening. But one thing, if you go back and look at the month-on-month, growth. I see that for the past 3 months, we're seeing a decline on month. It tells you that it's as a result of either the rebase of the food index or the harvest period was in now. But the good news also is also going to inform the decision of what the MPC, because they know that means that they are rate hike has started one way or the other to reflect on the inflation. But I think that perception is very, very important. When look at when US announced their own the same consumer price index, the market reacted positively because there was a slowdown, and also they are waiting to hear from officials from their Fed to give what they're likely. They're going to slow down. And that's what we're expecting to hear from our MPC as from let's see if they're going to slow down, because now they are seeing an element, and also they are making a move to kind of check the money outside the banking cover. For me, it's a good one if they can slow down, because yes, we're seeing about. Don't forget that because of the festive period, this northward movement in inflation is likely to be sustained, because for November, for December, we might see this inflation hitting around the 21.50 because of the the 2 months, or about 21.40 because this month we expect the inflation to remain up, and December, but from January, where consumption of all this will slow down. But that's in, and also don't forget we're expecting a general reset in the economy and the financial market, and also in the political environment. This reset is what investors will look like. Where can I key in? Because that reset will definitely come. We saw what happened just the week on that review, as in terms of the foreign exchange market. Overnight we saw drop from about 900 or 800 to 1600. Start coming back again. This reset is going to come because those that are speculating dollar or anything against equity, they're going to get their finger, because if you have sold your stocks at a loss in the equity because you take position in the circulation of a dollar, and that crash overnight, you have lost in 2 places. You sold your stock on a loss, the way you are good at it. That means for me, this is the time for investors to read down and see that this reset that is coming, how can I take advantage of reset? That's why we're preparing, that they should know that between now and the end of first quarter 2023, we expect to see that reset coming, which I take advantage to prepare yourself for the year 2020. Because no matter how happen, no matter what happen, we must see who might as a president in Nigeria in February. Once it comes, either Atiku, Obi, Tinubu, Kwakwaso, whoever that come, we are going to see economic reset, because we know that we need to address our economy and our security in order to move forward, because these two are very key points that we should address: security and economy. Once we do that, is politics, because without economy, there's no politics. If you want to sustain what you are earning as a politician, you need to put the economy in order. That means you must address, whether it's coming to address this economy, but if not, they will still have to end what they want to end.
Well, some probably do not even care as long as they have what.
No, if there's no economy, how do you want to pay you to what you are earning? There must be economy.
All right. Okay. If you can hear me, Mokhtar, it would seem the hawkish stance of the Monetary Policy Committee hasn't done much in addressing the surge in inflation rate. Talk to us about this. Why is it so? Mokhtar, if you can hear me, I was asking, what do you think about the hawkish stance of the CBN? How effective has it been? If yes, we want to hear. And if no, if it hasn't really been effective, we want to know why that is so. If you can hear me.
Come again, please. I didn't get you.
All right, go ahead.
I said I didn't get the question.
Okay. So I was saying that for a while now, the CBN has actually adopted a hawkish stance. That's hiking the MPR and all of that. So far, do you think it has been effective?
If you want to see how effective it is, then you look at the numbers. And if you look at those numbers, is that because they are raising hike in the United States of
All right, I guess we have a connection issue right there. But I think he was trying to make a comparison between what's happening in Nigeria and the United States.
Yeah, yes, like what I just said. He said if the numbers that we're seeing, if is still keeping up, it's going to still making a not that direction. That means we have not seen the effect of the style of aggressive rate hike. That's what he's trying to say. But I believe that for what they are doing now, they can't try to do the two at once. They need to give one to see the effect by December 15, according to them. The introduction of the new naira will come. Then for those that want to exchange the old naira, will have to till January 31st. Want to see how this thing play out. Also, for me, it's a good step so that we can checkmate flow of funds. Those that are hiding money in their kitchen and those that can be also can be controlled. For me, it's a good one so that we can make sure that we are moving somewhere, so that any policy that comes from CBN will make impact. Why the horticulture style is not making impact? Because funds are still elsewhere that are driving. We know that here these funds are coming from somewhere. We need to check it. I think it's a good one to start in New Year 2023.
All right, Octal, can you hear me?
Yes, I can hear you.
Okay.
And I was hearing you before the one went up. Like I was saying, when you look at what we've seen now, doesn't mean because other economies all over the world are raising hike, then we also have to raise our hike. But again, it's the normal thing to do in a highly inflationary environment. But again, if you look at those countries that they are doing hike in their rates, you also need to look at what the physical side are doing. This physical side is trying to guide against too much suffering from the people. And if you look at the UK, the physical side is looking at reducing in terms of energy, especially during winter. You look at the US, they are trying to put in more money into the hands of their people. Whether if you have a kid, they give you for the next 3 months, they will be giving $100 per kid. So they are doing things that to stimulate the economy so that the raise hike would not so much cause too many hardship on the people. But unfortunately, yeah, I think the physical side seems to be non-existent. And so when you see those rate hike coming in, then you see how it affects, especially the ordinary Nigeria. So for me, I think why we are not seeing those results, those numbers changing, is we are not having that synergy between the physical and the monitoring side. And as long as we continue to have those challenges, no matter how good your policy is, if you are not at the same wavelength with the physical side, we continue to have the problem. We won't see the effect of some of those policies.
All right, to close in on this one now, some analysts have said, tackling inflation requires urgent government intervention to address the challenges bedeviling the supply side of the economy. Talk to us about addressing the supply side. What is needed to address it, really?
Productivity, one. Exactly. Security, two. Then you need to the muster, which is attract foreign investment into the country. I mean, we've not been able to do that in the supply side, because what we see is demand and supply. Even in the FX market, what we are seeing playing out is a demand and supply. Once some demand and you're not able to meet supply, then definitely you take the hit. So in the food chain side also, we saw those destruction again also because of the security challenges. And I don't think we've seen the worst of it yet, but when the next number comes after this flooding incident that happened in some of these states, we might see a worse number in terms of inflation. So address the supply side, improve productivity, improve security, and attract whether both foreign or portfolio investors into your market, so that we can have more effects. And so by the time you have those effects there, whereby anybody can go to the bank and do his transaction in FX and go in there, take his money, and then that means we've been able to meet the demands, the demand side. If we do those three things, I think we could say that we are heading towards the right direction.
All right, thank you. You wanted to say something very quickly before we move to the next.
What you just said, that the physical and the monetary have to shake hands together to make some move. But you know, in Nigeria, this is not the first time. Any pre-election year, when it's close to election, I would say that the government will want to sit at the back seat and watch what is going to happen. But here, the promise that will have security for the election. But one thing is very important. The same government for the past 8 years said their plans, when they are coming back with that, the next level, they want to move 100 million Nigerians out of poverty. But surprised yesterday, I saw
133 million Nigerians.
They plunge into poverty level. I want to kind of reconcile this policy plan of the fiscal authority and the economic managers in that sector, in that angle of government. What are they doing? Because if you say when we are coming,
when you ask what are they doing, there are those who have said so many things have happened during the course of the 7 years. They talk about COVID-19 that came. They talk about recession. They talked about the Russia-Ukraine war. They talked about the flooding. They are saying these are things that happened that hampered this particular government from, doing all that, it could have done. So they said there's a lot that this government really had to deal with in terms of economy. What are your thoughts?